Some of the brightest minds in finance say this is only the beginning of what will become an unprecedented run on the precious metal. Some of the greatest legends in the gold industry are issuing a warning. We're already seeing a historic high in gold prices and gold demand, but these industry veterans say we may not have enough physical metal to meet this growing demand. This isn't another video about the gold ETFs not having the metal to back up their shares. This is a much larger, systemic issue. We're already seeing increasing demand for gold, from central banks to hedge funds to individual investors. But some of the brightest minds in finance say this is only the beginning of what will become an unprecedented run on the precious metal. And as demand really heats up, we'll have a hard time meeting that supply. And the reason is simple. After years of low gold prices and low capex, the gold industry simply hasn't found enough large gold deposits. Ian Telfer, the former chairman of Goldcorp, has said either this year gold production starts to go down, or next year it starts to go down, or it's already going down. We're right at peak gold here. Pierre Lassonde, the billionaire founder of Franco-Nevada, has said, if you look back to the 70s, 80s and 90s, in every one of those decades, the industry found at least one 50+ million ounce gold deposit, at least 10 30+ million ounce deposits, and countless 5 to 10 million ounce deposits. But if you look at the last 15 years, we found no 50 million ounce deposit, no 30 million ounce deposit, and only a very few 15 million ounce deposits. This lack of major gold discoveries could lead to a frenzied takeover activity as large gold miners acquire smaller companies with promising deposits. Mark Bristow, CEO of the world's second largest gold miner, Barrick Gold, recently emphasized the importance of takeovers in the gold sector. The industry still needs further consolidation. Canada still needs more work on consolidation. Specifically, he says, gold miners must invest in finding new deposits to replace reserves. And so far this year, we've only seen about $14 billion in deals, compared to $26 billion in 2019. The large miners are looking to acquire companies with high-grade deposits that are producing gold. To sum it up, we're currently experiencing record gold demand, and gold supply can't keep up. Shortly, I'll tell you about the next company in North America to start producing gold. It's called PureGold Mining. The company will start pouring its first gold in 2020. And its world-class deposit is located in one of the richest gold-producing regions on Earth.
Canada benefits from a long history of mining and a strong regulatory framework. So when you look at Red Lake in particular, there's been continuous gold mining there for about 100 years. 64 mines that our team has played a key role in discovering, exploring.
In this video, we'll explain why the current macro situation of high debt and lower interest rates is a dream for gold investors. We've also spoken with some of the biggest names in the gold mining and investing space to share their thoughts on gold and some actionable investment ideas. First, let's talk about why we're seeing surging investor demand for the precious metal. I'd like to introduce you to Rick Rule. Rick is the president and CEO of Sprott US, one of the world's leading resource investment firms. He's been in the business since 1974, covering many resource cycles, and he believes today is one of the greatest times in his career for precious metal investors.
The macro backdrop from my point of view is damn near perfect for precious metals. In my career, gold and then gold equities have moved really for many reasons, but mostly as a consequence of fear, and specifically fear of the depreciation of purchasing power of fiat currencies.
The US deficit has hit $864 billion for the month of June, and it's on pace to hit $3.7 trillion for the fiscal year ending in September. The world is drowning in debt, and there's no end in sight. Already the Fed funds rate is at 0%, and Trump is calling for negative interest rates in the US, which would add to the approximately $15 trillion plus of debt around the world with negative yields.
The debt at the federal level is $24 trillion and counting. That's the on-balance sheet liabilities. But even more concerning, the off-balance sheet liabilities of the federal government, including, looking at me, Social Security, Medicaid, Medicare. exceed $100 trillion. And then, of course, there's negative interest rates. Interest is the compensation that savers receive for deferring consumption. Nobody can invest in U.S. Treasury securities with a straight face, given these artificially low interest rates.
Add to that protests, trade wars, and geopolitical uncertainty, and it's no surprise investors are turning to gold, which thrives in times of uncertainty and low interest rates. Gold prices recently hit $2,000 an ounce, and demand has been going through the roof.
Among U.S. investings and savings products is between 1/3 of 1% and 1/2 of 1%, which is to say that precious metals and precious metals related assets enjoy a market share less than 1/2 of 1% of all savings and investment assets. Gold doesn't have to win the war against the US dollar. It needs to lose it less badly. The 3-decade mean in terms of market share for precious metals and precious metals related assets is 2%. If gold and precious metals related assets merely return to mean, the 3-decade mean, demand will somewhere between triple and quadruple, and that's precisely what I think is going to happen. The other question, exploration success, is a very, very different question. That isn't driven by macroeconomics, it's driven by markets. The truth is that our society has underinvested and misinvested in exploration for many, many years. The industry has spent too little and spent it too poorly. And the consequence of that lack of expenditure has been a real dearth of exploration success. And what that means is that when the odd successes, tier 1 successes take place, the industry pays absolutely eye-popping multiples for them because we have a real shortage industry-wide of projects to put into production, and even a real shortage worldwide of high-quality exploration targets, particularly targets in places that people can invest with a straight face.
ETFs bought a record 734 metric tons of gold in the first half of 2020, according to the World Gold Council, taking overall holdings to 3,621 tons. Central banks bought 684 metric tons in 2019 alone. As the global rush for gold continues, companies with large gold discoveries should be richly rewarded by the market. PureGold Mining is one of those companies. The company will start pouring its first 1 million ounces of gold later this year. More interesting is its shareholder base, which includes the world's largest mining company, Newmont Mining, and billionaire Eric Sprott, who owns over 10% of the company. But that's just the beginning of what could become the world's next great gold mine.
One of the most important aspects in the gold mining space really is the team. And within PureGold, I'm extremely thrilled with the team that we put together, both from the board of directors perspective and also the executive management team. On the board itself, it's a board that's comprised of seasoned professionals across the mining industry, and they provide a lot of guidance to the company moving forward, and a real depth and breadth of experience. This is a team that's done it before. 64 mines that our team has played a key role in discovering, exploring, and bringing to the development stage. There's 33 operations that we built, 68 mines across the world that we've actually operated on. So that really does speak to, again, that breadth of experience. We're really thrilled to be in Red Lake, Ontario. It's one of the themes that, I often like to touch on. It's in Canada. And, obviously Canada benefits from a long history of mining and a strong regulatory framework. There's really no geopolitical risk within Canada. And so when you look at Red Lake in particular, there's been continuous gold mining there for about 100 years. In fact, 30 million ounces of gold have been produced out of the Red Lake camp to date. And that's not just, gold, it's high-grade gold. Today we're on the cusp of production with the first gold targeted before Christmas this year. And that follows a year of incredible developments. About a year ago today, we announced a project financing, which included an equity financing largely led by Eric Sprott, a real visionary within the mining space. We followed that up with a project finance package, which fully funds us to production. In fact, we'll have a real strong working capital buffer as we come through into commercial production. When you look at all the operating mines around the world today in production, the PureGold mine will be the 5th highest grade mine in Canada, or the 17th highest grade mine in the world. And that puts us in about the 95th percentile. So when you look at the PureGold mine, it sits within a broad property package, 47 square kilometers, which we own the mineral rights and the surface rights. There's 2 historic mines that operated on the PureGold property, and collectively they produced 2.5 million ounces of gold at about 10 grams per ton. Today, we have a mineral resource of 2.1 million ounces indicated at 9 grams, another 500,000 ounces inferred. So when you put it all together, you're looking at something that, already is about 5 million ounces. And that is a bar that often establishes the difference between a smaller deposit and a large deposit. So at the 5 million ounce threshold, you're really transitioning into a different class of deposit. And so I think we're already there. And frankly, I think we're just scratching the surface. So at PureGold, we're really excited about the path or strategy that we've laid out for the coming years. We saw an opportunity. When you look at the evolution of PureGold over the last 4 years, you could really argue they've been quite counter-cyclical. So what exactly does that mean? Well, it's been a fairly difficult market since 2011 when gold was last at the levels that we're seeing today. And during that period, we acquired the asset at a very low cost of entry. We did a lot of geological work to understand the deposit, and then we started to drill. To date, we've drilled about 270,000 meters on the project. We've made new discoveries. We fully funded a mine build, and we're in the cusp of production today. First gold pour is being delivered into a rising gold market. So we think we've timed this perfectly. You step back and you look at our feasibility study completed in February of 2019, and it was done at a metal price of $1,275 an ounce. Since that time, we've seen gold approach $2,000 an ounce. And what that means is that with an all-in projected cost of $787 an ounce, we're looking today, using today's metal prices, at a margin of about $1,150 an ounce, which is an absolute incredible margin expansion that we've seen over the year. And so we really think we're perfectly timed. We've got 4 titans in the industry, if you will, that collectively own about 30 to 35% of PureGold. In fact, the lead investor when we acquired this project was Rob McEwen. Rob McEwen's the founder of Goldcorp and was at the helm when the high-grade zone was discovered, a discovery just to the north of us that really transformed Goldcorp and brought them from a company at the time was a several $100 million market cap to, at its peak, being the largest mining company in the world by market cap. So certainly he needs no introduction to Red Lake and the value of discoveries in that camp. Eric Sprott came in last year with a $20 million investment to drive the development of our operation, and more recently put in another $10 million to backstop an aggressive exploration program. And what he likes, and we share this vision, is the high-grade 8 zone.
I mean, if you want sort of greatest hits, I remember in the early 90s, Arequipa resources extremely well. On only 11 drill holes, the stock went from 30 Canadian pennies a share to $30 a share before being taken up by Barrick. And another one that comes immediately to mind was Francisco Gold, which made not one but 2 discoveries, one in Mexico, one in Guatemala, and escalated in price from $1.60 a share to $14 a share. But what was interesting about that is that the acquirer of the company, Glamis Gold, which was undervalued itself, was undervalued because nobody understood their growth strategy. When Glamis took over Francisco and their growth strategy became apparent, Glamis doubled too. So you got paid $14 in Glamis shares for what had been $1.60 stock, and then the Glamis shares in 12 months doubled. The first part of that question is very, very speculative. My suspicion is, in terms of a normal bull market, that we're in the 3rd inning of a game, but I suspect this game goes extra innings. In other words, there's a bit of a trick answer, because I can't see a policy response that's available to politicians that won't be good for gold in the next 5 years.
So when you look at PureGold, there's a number of attributes that I believe really will drive value moving forward. And I've touched on some of them in this conversation. Location. So we're located in Red Lake, Ontario, and I think that's really important. It's important for a number of reasons. One, being in Red Lake, Ontario, Canada, this is a jurisdiction that's got a long history of mining. It's well established. Geopolitical risk is non-existent. But importantly, from an endowment perspective, this is one of the highest grade gold camps in North America. There's been 30 million ounces of production that's come out of Red Lake, and I think that's a real important feature of our own PureGold mine. Secondly, you want to look at scale. We've got a deposit that spans a 7-kilometer footprint in terms of what we've discovered so far. We've drilled it off down to about 1 kilometer depth, but we recognize the potential for it to expand far beyond that. And so our deposit has real scale attributed to it. And I think that's also quite important. Now you look at the opportunity to deliver into a rising gold market. PureGold is fully funded today for for production. And so we think we're going to benefit from a period of margin expansion unlike any we've seen in quite some time. And that will allow us to really aggressively drive forward on a growth program where we see opportunities to move quickly into a second phase of mining, to layer up on the mine plan, on the processing plant, and drive that production profile upwards.
I own it myself, and I'm not saying that anybody else should. I own it because I know and have known the people behind it for a very long time and hold them in high regard. I own it because they are exploring in what has historically been an extraordinarily fertile piece of ground, and in an area where if you make an economic discovery, you can put it in production. And I own it because if they are successful as I hope they are, I believe that there's enough interest in a high-grade, high-quality gold project in that part of the world that I will be rewarded.
The Red Lake District in Ontario is one of the richest gold-producing regions on Earth, with over 25 million ounces of historical production. And it's home to Goldcorp's famous Red Lake mine. Goldcorp discovered an area of ultra-high-grade gold called the high-grade zone, and by 2004, annual gold production at its Red Lake mine increased from 54,000 ounces to over 550,000 ounces, and its average gold grade increased from 8 grams to over 77 grams per ton. PureGold is drilling its own high-grade zone called the 8 zone that it believes is similar to Goldcorp's famous high-grade zone. Drill results so far show the 8 zone holds large amounts of incredibly high-grade gold. And like Goldcorp's HGZ, the 8 zone could supercharge PureGold's production. Eric Sprott, the billionaire resource investor and one of PureGold's largest investors, agrees, saying, "The ultra-high-grade hits in the 8 zone remind me a lot of the HGZ that built Goldcorp. These are the types of discoveries that have the potential to become company makers."